Now we go to question 10. First we read the question carefully and give the proper placement of each item in the question. Vimal and Kamal are partners sharing profits and losses in the ratio of 2:1. We have to divide the profit in this one ratio. From the following trial balance and adjustment, prepare a trading P&L account for the date 31st March 14 and balance sheet as on that date. No debit balances. Opening stock. It is the first placement of trading account. It's a TD. Furniture and fixture is an assets A. Cash in hand is assets A. No bad debts is a loss. Expenses, interest expenses is a PD. Salaries and wages. First word is salary is indirect expenses. It's a PD. No purchases is a direct expenses. It's a TD. Sundry debtors is an assets A. No general expenses is indirect expenses is a PD. Land and buildings is an assets A. Carriage inward is a direct expenses. It's a TD. No goodwill is an assets A. Provident fund contribution is a indirect expenses is a PD. No advertisement. It is given for 3 years period. Total amount is 4,800. Additional information is given. WEF 1st October 13. WEF long form is that with effect from this date 1st October to 31st March. It comes 6 months period. 6 months proportion amount goes to the P&L account debit side and remaining portion is treated as an advance. It goes to the on asset side. Now we find out it. 4,800 is for 3 years. We divide by 3. It comes rupees 1,600 is a per annum or yearly. And half years it's come rupees 800. It goes to P&L account debit side and remaining portion rupees 4,000 goes to on asset sides. Now next, Provident fund investment is an assets. Shares in B Limited is also assets. Now credit balances. Sales is a direct income is a TC. Sundry creditors is liabilities L. Dividend received is a indirect incomes PC. Provident fund is liabilities L. Interest on PF investment is also liability. It is added in a provident fund account on liability sides. Now capital is liabilities L. No adjustments. First adjustment, stock on hand on 31st March 14 was valued rupees 25,000. First effect is trading on credit sides and second paid on asset sides. Now rupees 2,000 paid during the year as building repairs wrongly debited to building account. It is to be deducted from building account and second paid on P&L account debit side. We have to take out the buildings. Here it is building. Now third adjustment. Depreciate land and buildings at 10%. It is also deducted from building account and second paid on a P&L account debit side. Again we have to take out the land and buildings. Now fourth adjustment. Maintain RDD at 5% on debtors. It is to be deducted from debtors account and P&L account debit side. It means it will be added in a bad dates one. We take out the bad dates and again sundry debtors. Here it is. Now next adjustment. Fifth number. Reserve for discount on debtors and creditors are to be made at 3% and 4%. Reserve for discount on debtors is 3% and reserve for discount on creditors is 4%. Reserve for discount debtors is deducted from debtors account and a P&L account debit sides. Reserve for discount creditors is to be deducted from creditors account and a P&L account credit side. This means PC. We have to take out the sundry debtors account and also creditors account. Now next, 6th number adjustment. Uninsured goods worth rupees 2,000 destroyed of hire. First if it is a trading on credit side and second paid on P&L account debit side. It means a TCPD. Okay. Now we go to answer sheet. Answer sheet is like this one. Messrs Vimal and Kamal trading P&L account for the year ended 31st March 14. Debit, credit, particular, rupees. First we try to complete the trading account. Now here we have to find out the opening stock. Now see opening stock rupees 20 to 50. Right here it is to opening stock. rupees 20 to 50. Next is the purchases. Rupees 87,500. Next is carry inward. Rupees 1,748. Now see on credit sales. Sales. Write on credit side by sales. Rupees 1,47,500. Now next TC item. First adjustment. Closing stock. Rupees 25,000. Now see next TC. Here it is goods lost by fire. On credit side, right in middle column. By goods destroyed by fire. Rupees 2,000. Now see once again. Okay, nothing else. Now we go to close the trading account. Total of credit sides is rupees 1,74,500. Write on debit side 1,74,400, 500. Write a total. Now from this one total we have to subtract all of these items and answers comes rupees 65,002. It's a gross profit. To gross profit is a carried forward. It is transferred to P&L account credit sides. Gross profit is a brought forward rupees 65,2. Now try to complete the P&L account debit side. First is a salary. We have to find out the salary. Here it is. We write first to salaries and wages. Rupees 9,750. Next is bad debts. Inner column rupees 1,250. There is adjustment. We have to find out the adjustment. We have to add RDD. Add RD. We make the working notes. Here it is. RDD is a 5% on debtors. 5% on debtors. 5%. Now find out the debtors amount rupees 41,500. It will be rupees 2,075. We have to add RD 2,075. Total 3,325. Okay, again we have to find out the reserve for discount creditors. Second adjustment. Reserve for discount on the debtors. It's a 3% on debtors. 3% on 41,500. From this one we have to subtract RDD. Now 3% on 39,425. 3%. $1,182.75. It's a round of rupees 1183 is reserved for discount on debtors. This will be on debit side to reserve for discounted debtors. Owner debtors rupees 1183. Okay. Now see next general expenses is a P lock and debit sheets rupees 1900. Next is a PF contribution rupees 1250. Next is advertisement rupees 800. Okay, nothing else. We find out the in adjustment. Now we have to write repairs to building rupees 2000. Okay, now we have to write depreciation on a building amount rupees 75. Depreciation is a 10% on a 75. We have to subtract the building repairs 2000. 75 minus 2, it comes 73. 10%, it will be 7300. Now next loss by fire we have to write. Loss by fire rupees 2000. Okay, now go on the credit side. Find out the PC item by dividend received. Rupees 4000. Again we have to find out the PC. Now reserve for discount creditors. Write on credit sheets. Reserve for discount on a creditors. Okay, it's a 4%. 4% on creditors amount is 33,500. We see 4% on a 33,400. It comes 1340. Okay, now see again, find out the PC item. Nothing else. We go to close the PL account. Credit side firstly. Total of credit sides rupees 70,342. Right on debit side so 70,342. From this total we have to subtract all of these items and answer come rupees 40,834 is a net profit. It is to be transferred to capital account. Net profit transfer to capital account. Partner's name is a Vimal and second name is a Kamal. Ratio is a 2:1. Proportion amount goes to Vimal 27,222 and Kamal's proportion is 13,612. Just we make the total. Okay, correct. Now we go to the balance sheet. Balance sheet is a like this one. Vimal Kamal balance sheet as on 31st March 14. Liabilities, assets, rupees. First we go to close the asset sides. First we have to write the long-term assets. Now see, goodwill is a long-term asset. We write first goodwill rupees 30,000. Next is land and buildings, rupees 75. From this one we have to subtract repairs, rupees 2,000. Answer comes 73,000. Again we have to depreciation at a 10%, it comes 7,300. Answer comes 65,700. Now next is a furniture fixture. Furniture and a fixture, rupees 15,000. Now we go sequentially. We have to find out the assets. Sundry debtors, rupees 41,500. We have to subtract RDD at 5%, rupees 2,075. 2,075. Answer comes 39,425. Again we have to deduct reserve for discount, rupees 1183. 1183. Answers 38,242. Now next is a advertisement. Rupees 4,000. It is also called as a deferred advertisement. Deferred advertisement. Next is a PF investment. PF investment, rupees 19,000. Also, shares in B Limited is assets. Shares in a B Limited, rupees 13,000. Next is the closing stock. Rupees 25,000. Now cash in hand we have to write remains is. Now on the other side, cash in hand, rupees 1,802. Okay. Now we go to on liability sides. First we have to write capital. Partner's name is Vimal. Vimal's capital is 80,000. We have to add net profit. Net profit rupees 27,222. Totals 1,07,222. Next name is Kamal. Kamal's capital rupees 40,000. We have to add net profit. Proportional amount rupees 13,612. Total 53,612. Now we have to find out the liabilities. Creditors liability, creditors syndicators, rupees 33,500. There is a tick adjustment, reserve for discount creditors. Subtract reserve for discount on creditors, rupees 1340, 1,340. Answers comes 32,160. Now next see. Provident fund is liabilities. Write inner column rupees 17,500. We have to add interest on PFI, Provident Fund Investment, rupees 1,250, and total comes rupees 18,750. Again, we have to find out the liabilities. Okay, nothing else. Now we go to close the balance sheet, total of assets and total of liabilities. Total is 2,11,744 is a total. 2,11,744 is a total. This is the complete answer, and close the answer sheet. Okay, this is answer. Thank you.